we saw very strong optimism in the first quarter over the US stock market. Do you think the bull case is still intact?
Sure, and I think there was plenty of reason for optimism coming into the new year. Economic growth was robust despite high levels of interest rates. Inflation was seemingly heading back towards its 2% target without a bumpy process along the way. The labor market was intact, and corporate profit margins were really high, so it made sense for equity markets to really be surging ahead. However, a lot of that was predicated on the idea that the Fed was going to achieve their so-called soft landing, or returning inflation to 2% without meaningful damage to the US economy and the labor market as a whole. Now, of course, what we've seen over the last couple months is that stickier inflation has really changed that dynamic. The Fed is no longer going to be able to cut rates 6 or 7 times as markets have been pricing in at the beginning of the year. More likely outcome is that they're going to hold them for a prolonged period and maybe begin to start cutting rates towards the end of the year. Without those rate cuts priced in, equity markets are not going to be quite as bullish. Now, of course, higher interest rates have a negative correlation with equity markets. Obviously, future cash flows for corporations are going to be less valuable under higher interest rates. But also, other assets such as bond and gold are going to be more attractive under higher interest rate scenarios. There's going to be less demand for equities. So we'd say in the near term that the bull case maybe has taken a step back. However, we don't see a larger correction on the horizon. Global demand and domestic demand and the outlook for the global economy is still relatively upbeat. And so unless that noticeably changes, we don't think a larger correction is on the horizon.